Good afternoon, everyone. It is October 24th, 12 o'clock exactly on a pretty cloudy but cold Houston afternoon. My name is Faisal, and y'all already know what these videos are about. I'm just going to go over some of the stuff that I found interesting throughout the week. It was a pretty big week as far as earnings season continuing. We got some we got some major selling and high growth names, but there was also a couple of things that were interesting throughout the week, which I'll get to in a bit. And I'm also going to go over a couple of the alerts that I put out on Friday, which may surprise some people. But let's go ahead and get to it. So this week, coming into this week, let's go ahead and just recap. I was expecting some selling, but I wasn't for sure. I think on Sunday or Sunday or Saturday, I had mentioned that I was going to be neutral on Monday, that the market could go either way. But by Monday, I should have the right signs and figure out which way the market wanted to go. And for the most part, on Monday night or Tuesday morning, I had gotten those signs and I had told people, hey, this market's coming down. It's looking like everything's lining up. And for the most part, it was right. I think my shorts did amazing this week. Peloton down. How much was it down? Almost 7% this week. MongoDB down 7% this week. Tesla down 4.5% on a really nice earnings beat, and I forgot what else. I think silver was flat. No, silver was up a little bit. Okay, and then XLK down 2.2%, and the almighty pen down more than 10%. So it was a really nice week for me. I think for the most part, the selling in my stocks went in the direction that I wanted it to go in, and definitely had that volatility that I was expecting. But one thing that was different about this pullback, and keep in mind, this was not just segmented to these stocks that I pulled up. You could take a look at Okta, which is a cybersecurity leader, down 10%. How much was Adobe down? Adobe down 3%. Actually, real quick, let's go ahead and just take a look at the overall sectors. Actually, no, I'll get to that in a little bit. But what was another one that was down? CrowdStrike, another cybersecurity leader, down 7%. CRM down 3%. What's another one? There was another one that was down a lot. Datadog, another cloud stock. Okay, down 9%. So there was a lot of selling all across the high growth space. It wasn't just in my stocks. And for the most part, this was expected. I had warned people that, these stocks were very overextended, and a pullback like this, where you can get anywhere from 5 to 10% declines in a week, that was totally within the margin of possibilities. But one thing that I did not expect to see was the rise in inflows into value and bailout stocks. So we've all seen how bad high growth stocks did this week. Let's go ahead and check out RCL, which is the best cruise line in my opinion, up 9.6% this week. Let's check out LUV, reported this week, gave some really strong numbers as far as cash reserves and the lack of cancellations for their winter schedule. A lot of really positive notes in the earnings call. I don't know how sustainable that is, aside from the cash stuff. I think the cash is good, but that this stock was up almost 8%. Let's take a look at Delta Airlines, up 8%. This one I'm sadly short on, but we'll see. I'll get to a little bit on that in a little bit. But I did not expect to see these types of inflows. Let's check out Marriott Vacation, which is a travel stock, up 8.5%. And then let's go ahead and check out the main value sectors compared to tech. So XLE was up 0.66%. XLF was up 1%, and XLK was up, or no, XLK was down 2.2%. And then let's take a look at ARC for more of the high growth stuff. That was down 3.5%. So there was a complete disparity. And as you can see from the leaders in the bailout stocks like Royal Caribbean, Marriott Vacations, Southwest, which were up 8%, you saw kind of the same type of volatility in the high growth space, but to the downside. So it begs the question: did money essentially move out of these high growth stocks and into the bailout definitely the bailout stocks and overall the value sectors outperformed. So that remains to be a question in my mind. That was something that I was not expecting to see, considering we were seeing rising cases in COVID to, I think on Friday, we made an all time record, at least in the US. So I expected these businesses, which are largely affected by COVID, to struggle, at least in the short term. But, these inflows could indicate not only a rotation, but also, I'm sorry, a rotation out of extended high growth assets, but also a discounting. It could be discounting the vaccine that could potentially come out early next year. I really don't know what to say about it, but ultimately, just based on my short-term technical formula and everything like that, I think these stocks have to prove a little bit more before I get excited about them. But ultimately, being short Delta, I'm close to covering that short if I start to see it break out above some key levels, along with Southwest and its other peers. I think if I get that whole congregation to show me the right stuff, then that's enough for me to be like, okay, airlines could be discounting a vaccine, which ultimately people are expecting travel to go back and things go back to normal once a vaccine occurs. So that's not a trend I want to fight, even though I think it's going to take a lot longer for these airlines to get back on track than people think. And I don't think a vaccine will necessarily fix everything, but it's a start. And that's something you don't want to be betting against, especially since these stocks are so far down. I mean, they've discounted, you could definitely make the case that they've discounted a lot of negativity just trading down at these levels. So for as I said, Friday, okay, I was short from Monday to Friday, definitely, I think Friday morning. I was feeling good about my shorts. And then I started to get some interesting signals. Uh, Not only did I feel like these high growth stocks were short term oversold. They were starting to hold some key support levels. A lot of stocks, whether it was Okta, Coop, um, there was another one that there were a couple of them. Even Peloton actually held a nice support level. There were a couple of them where I saw the selling. Oh, Zoom. I saw the selling and throughout the week, and I was like, okay, the 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 value guy in me or the volatility guy in me feels like there still needs to be more of a balance in order to, or I'm sorry, there needs to be more downside volatility in order to create that balance. Like for instance, we could take a look at Peloton that shot up this much. For this stock to, oh, I'm sorry, not Peloton, or this is Zoom. Yeah, Peloton, same thing. So for this stock to have this type of parabolic move, there has to be some balance to the downside. Like there can't just be one bad week, right? I mean, it doesn't make sense to me in my mind. It could happen. Like I've seen it happen plenty of times where the stock will move up right here and it'll actually just consolidate throughout this small range and wait for the moving average to catch up, and then it'll make a next leg up. I've seen that happen multiple times with high growth stocks, but because the characteristic is apparent in a lot of high growth stocks, I'm assuming that because it's that broad of a move, they should see more downside. It's not just a individual stock type deal. So it's not like all of them can consolidate. I think once again you're going to have this market sort out the winners and the losers, the overvalued from the undervalued. Once um, the optimism for other sectors starts to come back in and growth becomes more broad once again. So I think that, going into Friday, I thought that fine. I can hold on to these shorts and everything was going to be fine. But I think around Friday at 10, I decided to cover my Tesla short because I was seeing a lot of these signs that Peloton, Zoom, multiple high growth stocks were starting to show those initial signs of bottoming out. And so much so that I ended up even making a very risky purchase that I'll go over later on. But yeah, I think if you're short now, I would consider lightening up for sure. But if you are a bull, like definitely you're totally on the opposite side of me. You think this market can continue to go up. This would be the area where you would buy, I think, these high growth stocks, which is surprising because I really thought that there was going to be a lot more downside. And especially since this was just one week, you could say that the negative momentum could carry on to next week. But when I started to see um, this broad support, these broad support levels holding on multiple high growth stocks, it makes me feel like, okay, um, maybe the downside is in, and now a consolidation is likely, or in some cases, they could even break out above previous highs if the companies are that good, because the market still seems to favor high risk and growth. I mean, it's clearly telling you that the way that IWM is performing. Um, IWM continued to outperform the majority. I think it outperformed all the indexes. Yeah. So high risk appetite is still high in my opinion, even if it's not high growth. But ultimately, when high risk appetite is still high, I think it bodes well for the bulls when these high growth stocks do pull back to nice levels. I think you're still going to have this buy the dip type of mentality and ultimately take the winners up, definitely the better stocks higher. So Friday, I really felt that way. And I'll go ahead and get into three stocks that I ended up purchasing on Friday and creating alerts for. So, first one, we're going to go over Restoration Hardware. Now, this one was not a high growth stock. Granted, it is growing 45% next year. I mean, look at this from 2019 to 2020. There's no number right here, but that's a huge jump, 4 points, or, three and a half, whatever, 3.6. Um, and then, going up 45% growth from this type of year is incredible, in my opinion. It's a really nice earnings growth. And I really picked this stock because, I think a lot of housing stocks have been there's a lot of optimism in the housing sector, and I continue to believe that the high unemployment rate is going to wane down at some point. Sure, you could get the initial boom as people move out of apartments and into homes, but I don't know how long that boom's going to last if unemployment is this high. Like the natural demand for homes is altered because of this high unemployment, even if you do have this boom spike. So ultimately, I was just unsure. I like DHI, I like PHM in the housing sector, but I just am a little bit uncertain. I know that rates are low. People will be able to get once you do have money and a job and everything like that. People will be able to get a home a lot easier, but that's these stocks have already propelled so high. So ultimately, I'm not saying to not get into these stocks, because by all means you could definitely get into them. Look at the growth for this year, next year. It's totally accelerating faster than any point in the last 5-6 years. But for me, I wanted to play something more immediate. So as these homes get closed today, as the demand is still hot right now, um, I think that that's very good, but it also leaves this gap in terms of time, to where people have to fill in. Oh, sorry, people have to fill in their homes with furniture, and ultimately, when I look at this entire crisis, I think who is moving in this economy, because if unemployment is so high but housing is in a boom right now, who exactly is moving? And my thesis is that it's people with money, people who are coming from New York and moving down south Texas, and they're going to realize just how cheap it is down here. And I think when you got money, Restoration Hardware is probably the most premium furniture outlet or furniture place in America, at least from my perspective. That's usually rich people that I know, they love Restoration Hardware. That's where they get a lot of their furniture. So in my mind, if there's a rich demographic or a wealthier demographic that's buying homes, but they're coming from apartments which are smaller, they're obviously not going to be the same size as homes. They're going to need to buy more furniture. And so I think that bodes insanely well for Restoration Hardware, especially over the next 1 to 2 years. Even if there is some type of unemployment glut that could affect those overall housing stocks, I think Restoration Hardware will continue to see a nice amount of inflows as this trend continues, where people are moving out of apartments and into homes. So it's just another way to play that housing trend. I really liked it. The technicals matched up. I got a short term technical signal, I think around 11 o'clock, and that stock went up. I believe I got it at 383. The stock went up 10 points from where I got it. I really didn't think it was going to be that strong of a signal, but hell, I mean, it's already looking like it wants to test all-time highs, and it rightfully should. Look at the growth, look at the outlook on the industry, I'm definitely very positive on this stock, and it could end up being um, a medium term position if things pan out very quickly. Um, in relation to Restoration Hardware, there was also another stock that I was thinking about getting into, but I decided to choose Restoration Hardware. Home Depot, uh, another one, just set up great technically. I got a short term signal for that one too, but it was either between Restoration Hardware or Home Depot, and I thought Home Depot is more of a broad housing play. If unemployment wasn't so high, I would say Home Depot, the runway still looks great, but Restoration Hardware, once again, is specifically for my theory that who's moving and where they're moving from and all this different stuff. But Home Depot still going to be good. I think it's still going to go up. I think they're somewhat related in terms of momentum. When I've done the research, they kind of go up at the same time, which is weird, but it is what it is. So keep an eye out for that one this week. Next, I am going on to my premier pick in the semi equipment space, ASML. Just recently, I used to value Lamb Research a little bit higher than ASML, but man, the momentum in the stock, the short term technicals in the stock, it just clearly separates itself. It reminds me of Nvidia, how Nvidia kind of rules the chip game. ASML feels very much so. It trades kind of in the same way, in my opinion. And you know, even though it kind of got killed on its earnings, I believe its earnings were right here, dropped, and it's still trading much lower than the low of its earnings, which is it should be seen as that should be seen as very negative. Uh, Lamb also reported this week. I thought it reported an excellent quarter, great for the demand of semis in general, and I just overall the expansion of semis and the demand of semis. You are going to need way more equipment if you in order to keep up with that demand, and so like don't be surprised when Taiwan Semiconductor calls Lam Research saying, "Hey, we need all this new equipment because we're building a new factory or something like that." I think that's definitely in the play just based on demand trends and where technology is going and how the uh, what is that word? How the replacement cycle will go probably within the next 1 to 3 years as the old chips get replaced with new chips. You're going to see these guys do really well. And um, the main reason why I like semi equipment players specifically is because of their value relative to their growth. So as you can see, I mean, Lamb kind of got shaken up a bit, but even after this bad week, still a 19 PE, but it's still trading close to its all-time high. You're telling me this stock was probably at a 22 PE or something like that, but it's growing 40%. Granted, oh, this is okay. This is 2019, 2020. Damn. So in 2021, they're going to grow 40%. And then 2022, they're going to grow 11%. That's a pretty nice number. Um, and once again, you're seeing revenue acceleration pick up from 2% in 2019 now to 47% in the most recent quarter. Once again, just for the growth, I think in the entire tech sector, there's not a better sector. And I like semi chips also, like AMD, NVIDIA, Marvell, but all of them are fairly extended in terms of valuation. I know everyone wants to say valuation doesn't matter, but I still think that it does in terms of just relative performance and ultimately valuation has to matter at some point. You're still going to get great growth from these individual semi chip names. You're still going to get great price returns, but this move that you see in Nvidia right there, you could see something like that in a stock like Lamb as people start to value its growth a little bit more. You could see this PE, as I was saying before, at its high, it may have been 22, 23 PE. With this amount of growth, you could see this become 40 or 50, 60 PE, depending on the risk appetite in the market, which still looks very healthy, still looks very high. So you I'm expecting high premiums from these types of companies. Let's go ahead and take a look at the main one that I was talking about, ASML, growing 31% in 2020, then 30 or 28% in 2021. It's still a higher PE, but once again, it's definitely got a lot more consistency in terms of revenue and earnings. Also has a lot lower debt than LRCX, but the stock has performed, I believe, better over the last 2-3 years than LRCX. But I could be mistaken. I don't know the exact numbers, but from pretty much 100 to 400 in 2017, and this one went from 92 to see. Maybe they may be closer. Maybe Lamb may be a little bit better, but Just for this case, just based on my short-term technicals and everything that I've seen in the past, I like ASML better. But this play was not so much a play on ASML, but more on a play on the semi equipment space in general. So you could pretty much pick up Clack here, which is another really good one. I think they have earnings next week though, so you may want to wait on that. AMAT is another fantastic one. Margins really looking really good. Um, Estimates, once again, look at this industry. This is what the industry is trying to tell you. This is where you want to be, where the growth is. 35% just this year, 13% double digit next year. You're seeing revenue acceleration compared to previous quarters. The stock has been kind of chopped up, and ultimately, I'm expecting huge breakouts from all of these stocks. I just think ASML has the highest floor in case anything goes bad or in case I'm wrong. Um, Even though it's trading at probably the most expensive valuation, it still has the best growth in my opinion, and their their technology is very unique, and I think it's could be at the core of the next major technological cycle that's associated with supercomputer power and everything like that. So ASML, my top pick. That was the one that I picked up Friday. But once again, you could go with AMAT, Clack, or LRCX. This is more of a play on that industry versus um, the individual stock. And then lastly, let's talk about Fastly. Now, I was really killing this stock, killing people for buying this stock after the big drop when it dropped from, I think, what was it? When it dropped from 120 to $85, the low of that first day. I mean, I think it closed at 89. Yeah, closer to 90. I was really telling people, hey, this stock only dropped like to where it was 15 days before. And I believe I said that the likelihood that this stock was going to continue to sell off was still very high. And for the most part, I think I was right. It went down how much this week? Went down another 10% this week from its close last week. So yeah, I think that goes without saying that's pretty good. But this was actually one of the stocks that I picked up Friday. And I know it may come as a shocker because I really, I didn't sound at all. To be honest, I wasn't planning on picking it up. I liked the company, and I think people have gotten way too negative on it just because um, of the lack of usage from TikTok or just something relating to their customer. I'm not even sure. Just their customer acquisition in general, how much customers value their product. I actually think it's a very good product, and the addressable market should increase substantially. I think within the next 2 to 3 years, maybe even 1 to 3 years, as content continues to be built out and more layers of applications, solutions, different things are created through different mediums like videos and content creation. You're going to need to have that infrastructure that gets that information, that different um, that to get those pipelines ready to get that information to the end user from your hub. And there are other companies that do this, but Fastly I think has a very big name. The company is still growing very nicely, and it's not trading at an insane amount that it was before. Granted, the real reason why I really got into it was because I have an easy out. So this is pretty clear. Like, this is what I was waiting for ultimately, was if I did start to see something negative, like really negative, come in when the stock hit the bottom end of its range, somewhere close to here, which it did. I want to say it's around $74. That's when I told myself, okay, that's when I'm gonna get it. That's when I'm gonna get in. And when we got that, or when I saw that, I forgot who downgraded it, but someone downgraded it Friday, and the stock was down, gap down and everything like that. That was my sign. I was like, okay, people are getting very, very, very negative on it. This is where I can take a shot on just as a contrarian play, because my out is very simple. If it breaks below this 71 price and holds below there, I'm out. It's a very easy thing. This is where the range should probably be, between 100 and 72, 71, whatever it is. I got to double check the exact prices, but that's ultimately it. if I'm predicting that high growth, like what I was saying before, was showing me these signs that it's short-term oversold, and a lot of my leaders are bouncing back from key short-term support levels, then it's worth taking a flyer on it. And the downgrade only made me love it more. So that was a very surprising pick. I had no idea that I was going to do it, but I was looking at it, I was like, damn, this feels like the right time to get in. And even if I'm wrong, the out is very clear. So once again, look for it to keep this range. If there's, I know there's a lot of people. I had a couple people message me about what to do with Fastly and how low do I think it could go. Had no idea how low it could go. Had we not gotten that downgrade, I would have not bought it at all. So I think that downgrade really helped the stock, gapping it down, creating that sense of urgency and just liquidating people. People liquidated at a higher rate than they did the past 5 days. And ultimately, I saw some nice buying come in at the bottom. I was one of those buyers, and I'm just praying that it holds the bottom end of the range. But if it doesn't, I'm out. It's a pretty simple procedure. All right, and lastly, just to wrap things up, where do I expect this market to go next week? So, as I mentioned before, just 5 seconds ago, high growth should be bouncing back from these support levels because it's just too oversold. There are too many leaders that are too short-term oversold. Now, that doesn't mean these stocks are going to bounce back in a V shape like what you see, bounce back and go up all the way to here. No, you could pretty much see a scenario where, like here, where these stocks clearly oversold from here, bounce up one day, and I will probably know maybe about Wednesday or so whether or not this market is really strong. Maybe Thursday latest, whether or not the strength is for real. But I'm still iffy. I still think there could be more volatility to balance out the upside equilibrium within a lot of these high growth stocks. But I I just I tend to think that the market will continue to at least somewhat grind higher because it's just shown so much resiliency and I just don't know. Honestly, I don't even want to make any too far out cases as far as where I think the market's going to go beyond a week by week basis. But you know, at this point, it can go any way, and I think it's very important to be active and if you are going to be in these high growth names and these very risky names, definitely very important to be active. But just to get aside from that and get back on point, I think this market's going to get really, really funky this week. Um, Last week we had financials, energy, value sectors do really good. I actually think by the close on Friday, they were showing a lot of weakness as well. And that gave me some confidence in my recent purchases as far as my tech stocks like Fastly and ASML, because if they were seeing selling as value was seeing buying, now that I'm seeing the initial signs of slowdown in value stocks, um, if they continue, I think that bodes better for the tech sector in general. That's just the way it's kind of been going. It's been a very inverse relation. We've already covered this many times throughout the year, and that continues to persist. But keep that on your note. I definitely think that even stocks like Southwest, which reported really good, they're going to continue to get rocked and actually see the more of the brunt of the selling. Whereas high growth, which people think is now going to be selling even more, we'll probably see some more buying early on. Whether or not they take the market or they can go back to all time highs is another question. But I definitely expect about a 3 to 6% bounce in a lot of these names that sold off hard, like Okta, Fastly, MongoDB, just the high growth leaders in general, Tesla. So keep that in mind. I think it's gonna. I don't know which way the indexes will go. I'm assuming you're probably gonna see the Dow be flat, the S&P go down a little bit as energy and financials way down, but the Nasdaq, of course, I think that's the one I'm definitely high on. I think the Nasdaq will be very positive early on, but once again, it's a wait and see. Um, as far as if the strength is real or not. So that's pretty much all I had to say. I'm gonna be talking a little bit more about it as the week goes on. It's going to be a very important week, so be sure to read my updates on Discord. I put them in the live equities channel. I post it 95% of the time. I usually post in the morning around 10, and then at night just to recap what happened throughout the day. So if I get those signals, that's where I'm going to be posting them. If I feel like high growth is going to be selling off again, that's where I'm going to be posting it. So just be on the lookout for that. As always, I hope y'all enjoyed this video. Have a great day and happy trading. Peace.